We already had that. We already had the commodity shock of, I don't want to say of our lifetimes, but we had the commodity shock of the past 20, 30, 40, 50 years. I mean, that was insane. You had commodities that from where they were at, in the first half of 2020 to where they were at by the first half of 2022. I mean, we had commodity after commodity up 100%, 200%, 300%. That's not normal. You don't just see commodities go up hundreds of percent in a 2-year span. It happened. It happened. Okay? And so that's just a freaking great point. And you go back to 2008, we had an oil shock specifically in that sort of scenario where oil prices just went to the moon, right when you were basically going into recession. It was a very ugly, ugly situation. So as of right now, the consumer is far, far less leveraged than any point pretty much in history in terms of their leverage ratio versus their income. It's incredible. Everybody wants to look at the total dollar amount. Tell me you don't know anything about economics. Tell me you don't know anything about macroeconomics. If all you look at is the total number, of course the total number is going to get bigger over time. Like everything gets bigger over time. The economy gets bigger over time. Like debt levels get bigger over time. Asset levels get bigger over time. Everything gets bigger. It's all about percentage. How much of a percentage is your debt of your debt? If Warren Buffett has $2 million in debt, sounds insane to the average person. Oh my gosh, Warren Buffett's so heavily in debt. He's $2 million. I can't even imagine having $2 million. Never mind $2 million in debt. Oh, did you ever take into account that he's got like $100 billion of assets? Did we ever take that into account? Total numbers mean nothing. It's about the percentage, folks. Percentage. Keep that in mind, okay? Just a little gem for you there. Percentage basis. And the facts are the consumer's not even remotely close to as leveraged as a percentage basis as they were in, let's say, like before the great financial crisis. Not even the same ballpark. I mean, great tech stocks, they always looked overvalued. Like Amazon's looked overvalued for 20 plus years now. 20 plus years. Unless you really are down the rabbit hole and you really understand where Amazon's going long term, you've looked at that stock for 20 plus years and said, I can't own this stock. It looks overvalued. Tesla's looked overvalued since the day the company went public, right? But you take a step deeper if you really understand the business and you're like, oh man, this has this incredible opportunity, right? So yeah, that's actually a pretty interesting point he makes there at the end. And in regards to the economy, hard landing, soft landing, medium landing, any of that, we're not going to get clarity on that here in the short term. That's something that just needs to play out. Like people have wanted to just get either get it out of the way or just get clarity on that. We're not going to have it right now. We're about to go into year end. We're obviously about to go into holiday shopping season and all that. Unemployment rate's very low right now. So you're not going to get any clarity really in the short term about that side. I think you're going to get a lot more clarity on if we're having a soft or hard landing, medium landing, whatever in 24, but you're not going to get that in the short term. And so that's why I just look at this market and you have to be very disciplined with what you're making moves with, right? I'm buying stocks every week. I'm also cashing every single week. And I'm also adding hedges every month for 2024 because there's several different scenarios that can play out here. And I've got to be ready for whatever plays out in 24, whether it's everything just continues to be great, everything gets better, or it's a situation where things get bad. You got to be planning for all those scenarios in 24, in my personal opinion. And it is Amazing's on, all right? So Amazing's on. Somewhat of a newer position for me. I believe I started adding this one the end of last year and then certainly added a lot in early this year. Sitting at about a $145,000 position right now. We're up about $32,000 on this one, up 29% so far. I think it's very small numbers compared to what will be up long term. Now, in regards to Amazon, this is another one that's a little confusing. It's trading at about 63 times this year's expected numbers. I don't think that's accurate. I think Amazon's going to post some way better earnings per share. This current quarter we're in right now, that Amazon should report at the end of October, beginning of November. And I think they're also going to report much better earnings than expected next quarter as well. When I look at the cost-cutting measures they've been doing, and Amazon's just one of those companies that always finds cost synergies. I think revenue is going to be stronger than a lot of folks anticipate. So I actually think the company's trading at about 50 times, 50 to maybe 55 times this year's numbers, okay? Now, with that being said, they're still relatively expensive, right? We're talking about 2.5 times the market in general. But you got to understand, when it comes to Amazon, they have so many growth levers all over this company between Amazon, Amazon Web Services, the advertising business, Prime, Whole Foods, Twitch, everything they own there, that I look at Amazon and I see a company that has, 10 plus years of huge revenue growth still ahead. and profit growth that will exceed revenue growth overall for Amazon. So obviously with Jassy and the team at Amazon, I absolutely love it. I'm expecting Amazon to be an outperformer of the S&P 500 over the next 5 years, and quite a decent outperformer overall. So it's a tricky one. It looks expensive, but Amazon, you got to understand about Amazon, the stock always trades rich. It's never going to trade cheap. If you're on Amazon for a 15 PE ratio, it's just not happening. I hate to break the news to you, okay? Amazon's, since the first time I ever looked into Amazon, which was probably 2010 maybe, or 2011, because I was like, oh man, this Amazon company, I think they're going to be huge with e-commerce, and everybody, I could picture everybody ordering packages in the future and all this stuff that, obviously ended up playing out. But I remember I looked into Amazon, I couldn't even buy it back in 2010, 2011 because it traded rich. And I'm like, I can't pay that sort of PE ratio for Amazon. That seems crazy. Yeah, that was before I really knew how to value growth stocks overall. So Amazon, I probably not. Will I buy it? I'll probably not buy any more shares. I'm pretty happy with the shares I have. If the stock was to go down a bunch and next thing you know, it's under my cost basis for any reason, we had some sort of stock market crash, sure, I'll buy Amazon then. But I've built the position out. I'm happy with what I got. I got 145K in this one. And so I'm just kind of feeling like let it run in regards to Amazon. Okay, that's amazing on for you. So hold your horses for just a moment. What are we talking about here? Okay, so first off, very important in regards to Palantir, right? If they're adding a bunch of new customers, that could also be from the perspective of like free trials, or let's call it like paid trials, but without signing the big contract yet, right? Getting people to test out the product. We know a ton of people are interested in Palantir, right? And so, not everybody wants to sign a $100 million deal tomorrow, right? Not everybody wants to sign a $50 million deal, a $200 million deal right away. And so Palantir is a little more white glove service. Here's what we have to offer. Can go ahead and experience that. And then if you like it, we can see the revenue recognition down the road, right? And as we've heard from almost all these companies, including Snowflake, right? 2024 is when you're going to start to see revenue recognized for a lot of these companies on the software side, right? 2024. So everybody just got way too excited thinking, oh, we're going to see all these software revenues in 2023. It's just not happening. Like, you don't even have the hardware really set up yet. Why do you think NVIDIA is selling all these chips, right? Like, you got to put all these pieces together. And so this is just a classic story of like everybody got so excited thinking all the revenue's coming right now. And it's like the revenue's coming, but it's coming next year in regards to this, right? So yeah, to just assume like, oh, they must be taking hits from their other customers or something like that. No. Okay. I appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed. We got a free workshop for you guys. There'll be pinned comment down there. That's How I Find 10X Stocks workshop. That's absolutely free to access that. That will be pinned comment. Much love and have a great day.